Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those confusing company reports. Today, we're diving into a report from TUCOWS, a company that, well, let's just say their name sounds like something you'd find in a bird's nest, but they actually do some pretty cool stuff. We'll see what's been going on with them, and I promise, we'll keep it simple, like explaining Wi-Fi to your grandma. So, this is a Form 8K. Think of it as a quick update a company sends to the Securities and Exchange Commission, or SEC, when something important happens. It's like a pop quiz for the company, and we're here to grade their answers. This particular report is dated February 13th, 2025. That's the date of the event they're telling us about. The company we're looking at is called TUCOWS Inc. They're based out of Toronto, Canada. That's in North America, in case you were wondering. And, just for the record, their official address is 96 Mowat Avenue, Toronto. They have common stock, like most companies, and it trades on the NASDAQ stock exchange under the ticker symbol TCX. Think of the ticker symbol as their nickname on the stock market. Now, let's get to the main event. This report is about something called a stock repurchase program. That sounds fancy, but it's really just the company buying back its own stock. The big news is that on February 13th, 2025, TUCO's board of directors decided to authorize the company to buy back up to $40 million worth of its own stock. Think of it like this. Imagine you own a lemonade stand, and you decide to buy back some of the shares you sold to your friends and family. Why would you do that? Well, maybe you think your lemonade stand is undervalued, or maybe you just want to give your earnings per share a little boost. The company gets to decide when and how they want to buy back these shares. They have the freedom to do it at their own pace. This is called discretion. Why would a company do this? Well, there are a few reasons. Sometimes a company thinks its stock is undervalued, meaning it's trading at a lower price than it's really worth. By buying back shares, they hope to increase the stock price. It can also make the company look more attractive to investors, who might see it as a sign of confidence in the company's future. Also, if there are fewer shares outstanding, the earnings per share goes up, even if the total earnings stay the same. It's like dividing a pizza into fewer slices, so each slice is bigger. Now, this report also mentions something called Regulation FD. FD stands for Fair Disclosure. The rule basically says that if a company shares important information with certain people, like analysts or investors, it has to share that same information with everyone else at the same time. It keeps things fair and prevents insider trading. The company published a press release announcing the stock repurchase program. That press release is included as an exhibit to the report. An exhibit is just an attachment or supplementary document to a filing. So, to recap, TUCOWS is authorized to buy back its own stock, up to $40 million worth. They think their stock might be a good investment, and they're telling everyone about it through a press release and this 8K report. Let's peek at that press release from February 13th, 2025. Here it is. It's titled, TUCOWS Announces Stock Repurchase Program. Pretty straightforward, right? It repeats that they are authorized to repurchase up to $40 million of its common stock. And this part is important. The timing and amount of any repurchases will depend on a variety of factors, including the stock price, general market conditions, and other investment opportunities. Basically, they're saying, we might buy back stock, but we're not promising anything. We'll do it if it makes sense. The press release also includes some safe harbor language. That's just legal jargon that protects the company from lawsuits if things don't go as planned. It warns investors that things may change. It includes a statement from Elliot Noss, President and Chief Executive Officer of TUCOWS. He says the company generates substantial cash flow and believes its stock is an attractive investment opportunity. That's a pretty confident statement. The press release also gives a brief overview of TUCOWS' business. They're in the internet services business, providing services like domain names, internet access, and mobile phone service through different brands. So, they're not just bird's nests after all. That was item 8.01, time for item 9.01, financial statements and exhibits. This section lists the documents attached to the report. In this case, it's just the press release we just talked about. And finally, the signature. The report is signed by Ivan Ivanov, Chief Financial Officer of TUCOWS. He's basically saying, I swear this information is accurate. Alright, so now that we have decoded this message, let's talk about what I think about TUCOWS. Here's my take. TUCOWS is a company that's been around for a while, quietly building a solid business in the internet services industry. They're not a flashy tech giant, but they're profitable and generate cash, which is always a good sign. The stock buyback program suggests that management believes the stock is undervalued and they're willing to put their money where their mouth is. That can be a good signal for investors, but of course, it's not a guarantee of future success. One potential risk is that TUCOWS operates in a competitive industry. They have to constantly innovate and adapt to stay ahead of the curve. Also, economic downturns could affect demand for their services. Looking at their valuation, it seems they're trading at a reasonable price. It is difficult to assess exact valuation given the limited information, so a fair price range would likely be between $30 and $40. Overall, I'd say TUCOWS is a company with potential. They're not a screaming buy, but they could be a good long-term investment for patient investors. I'd rate them as neutral to slightly bullish. Thanks for watching. If you found this helpful, please subscribe for more simple and straightforward breakdowns of company reports. Let me know in the comments which company you'd like me to decode next.